Thank you. You guys all, you probably hope you've come to a meeting that I've been here before. I am Marc Peterson. I work for UFC. I work for you. I am a licensed commodity broker, just as Joe is. So when we get started, I need to do the same disclaimer to say what I'm going to say to you tonight is taken from information that I believe is correct, what I believe is the situation. The fitness and this information for any particular purpose, past, present, is not a guarantee of future results. And trading futures and options is risky and can cause substantial loss. Futures and options trading is not suitable for all investors. You all understand that? Memorize it. Now, one of the things that I find, and at the last couple of meetings I've said about this, you could almost put farming on here, couldn't you? You almost could. And what we're going to talk about tonight is you're going to have to make a decision here between when you're going to do this and how long you're going to keep it here. And for you guys that have been here before in some of these seminars, you know I love to refer to these. They're good grain bins. They are useful tools. But too often they become what, Joe? Monuments to indecision. And that's what we don't want to happen. So with what we're going to go through tonight, I say, what's the plan? Because what we're finding out at the other meetings, and we'll go through what you guys said, is most all of you have old crop corn. Most all of you have some, if not quite a few, old crop beans. And what we found out is you've sold very little new crop 15 corn or beans. So what's the plan? Okay? Because I always like to say, if you don't have a plan, the market will make a plan for you. And generally, if you let that happen, you're not going to like it very much. Because the plan the market makes tend to keep people not very happy, tend to catch you off guard. So what I'm going to talk about tonight is the two things that I can guarantee with a marketing plan is looking at price and time, and having a target in both, because I'm going to give you some price targets tonight that I would use and look seriously at as the market progresses over the next 2, 3, 4 months to say, what am I going to do at what level? Now, I don't know if the price targets I give you tonight will ever be reached before, say, the price targets down here. We want these, but what we don't always get what we want, right? But in your marketing plan, I'm going to give you some time frames. And it's going to be interesting because I've got a slide in here that we used last year. Can I see this? How many were here in the January meeting a year ago? 1 year ago now, we did these. Okay? Because we went over a lot of the same stuff. Because over here, your targets, I don't know if we're going to get these. But I know there is going to move along. And I know that in your bin, the crop you grew last year, in about 8 months, 9 months, the ultimate decision is going to have to be made. Is my old crop gone? What am I going to do with my new crop? Or am I going to build another monument to indecision? So with that in mind, I used to call this slide, over the last couple of years, I had a different comment on this slide. I called it bulletproof. Because some of the things over the last few years, we have had some of the best years we've ever had in agriculture. Would you agree with that? And because of that, it tended to make us think, I think, in a way that we were bulletproof. A lot of the meetings we did, and it's really great to see in agriculture with younger and younger faces showing up in the crowd at these things, mingled in with what I like to call the more experienced farmer, okay? But now, I changed this from being bulletproof to saying aiming is going to be important, because if this guy doesn't open his eyes and aim a little higher, this guy's going to be in trouble. There's got to be a plan B, because over the last few years, one of the things, I have time and I have price in here, one of the things that we've come to not maybe concentrate enough has been our cash flow. We can't let this happen. Over the years, what's the #1 reason a farmer tends to make a sale of crop? The #1.
Needs money.
He needs the money. Now, over the last couple of years, we've been what I would like to say pretty cash good. I mean, we had prices at harvest time. Best they've been all year. cash. And what happened then is rents and fertilizer prices and seed prices and all those expenses hadn't caught up to the market with what they are today, had they? So right now that cash flow is going to become really, really important. That third thing you got to watch out is you don't want to see that happen and get to a place where you're out to the bin again, making sales because you just need the money. And generally those are our worst marketing decisions of the year. So with that in mind, I'm going to talk about old crop corn first. One thing I should say about that cash flow is, if you've been to your banker lately, maybe over the last few years, you guys were getting Christmas cards from the banker. I mean, he was happy. You know, but now I'm hearing from guys when they go see the banker, he is asking way more questions than he asked over the last couple of years. He wants to know, what's the plan? What are you tending to do? And he's holding his coffee cup with two hands. You know, so it's going to be interesting. Old crop corn. I like to say now, Joe and I are not gurus, we're not prophets, you know, we're going to give you ideas. We watch these markets. I use charts, and I always tell you that charts, in every sunken ship, in every ocean, there's a chart. But charts just tell us where things have been. They are not a random walk. If it happened in the past, a chart's going to give you an idea of what can happen in the future. And it sure beats just keeping calm and just keep on guessing.
Hey, Pete?
Yeah?
Before you go on, we should probably let the guys have these sheets so they can fill out.
You know, that's just it. Jason, you want to hand out those sheets? I've got some there on the, use this sheet, take some notes. We got pens now on the top. If you do not get my daily market update and would like to, or if you'd like some help, tear off the top of that sheet and leave it on the table in the back, and I'll add you to the list, the email list. And I'll let you know when we're having some upcoming marketing meetings. So take some notes, because that's important. What I'm going to give you now is worth knowing, because this is what, this chart was used last year. The only thing that wasn't here is these lines, because that shows you what happened in the 14th July corn. And at this meeting, if you were there, what hadn't happened is there had been no rally last year. We were putting in new lows. We didn't know how low it was going. But what we did do is I said, now, if you watch this, which is the 15-year average seasonal price of corn, I said there's a very good chance that if you make sales and have in your marketing plan the first week of March, the first week of April, the first week of May, and the first half of June would be excellent times to make a sale in your own crop corn and get something done on new crop. This is what happened. That's what the chart looks like. We did make a high. We did make a high. And we did make a high, and we didn't make a high. Well, I'm going to go with 3 out of 4 ain't bad. In Montgomery, 3 out of 4 ain't bad. So, they're never always going to be right. But if you go into this year, the message, if you remember from last year, was not a lot different than this year, was it, Joe? But I think saying last year's January is generally not when the market makes a low. And this year it's been very, very, very seasonal. The average seasonal low is the last week of October. And that's when it came in this year. This is just giving you an idea of saying, if I'm going to look for a time to make a sale, this is what I'm going to put on the refrigerator. This is what I'm going to look in. Not that it has to be, but if this market is too hot, too cold, too wet, too dry somewhere out here, and it's correlating and the market is going up, it says do something. Okay? Now what I'm going to do is to go along with that is give you some ideas of what I would put in for targets. Okay, these are off of the chart. This is a weekly continuation chart of July. And I'm using July here because if you are on a corn, bean, Florida rotation, you're not going to go in and want to open your bins come March, April, or May. You're going to wait till July. And there is a carry in the market. The market is offering you in the futures market a carry. Keep it in the bin. However, so I'm going to use July. I'm going to go to the July here and say, okay, if I'm doing that, This was the first week of October. This is the rally that's taking place here. I would use HTA orders up in the 435 to 440. I'd split that in half here. I was going all the way up to 480, go in between there, 460 for another HTA increment somewhere on one of those dates, and then up to 512. 512 is as high as we got last year. Do you remember the Kiss Your Sister price I had on this chart last year? 520. And we made it to I think July did get up all the way to 518. So, you guys that are seeing that, this is what I want, write down. If no other reason to write down, you know, God willing, we'll be here 1 year from here doing another meeting. And if you guys write this down, you can come and say, you didn't know you're from a hole in the ground. But write it down, because I think we stand a very good chance of saying at least 2 out of the 4 of these will probably come to pass. What I gotta hope, and here's the hopium, that's that hopium pipe, that we're not down here looking at 337, the prices we saw back here in 2008 and 2009, before we get some of these picked off when it's too hot, too cold, too wet, too dry. What we hadn't seen last year that we've seen is this whole rally here. Now that's a little hard to figure, because Joe mentioned the funds, and you guys the funds. I think what's happened is the funds have changed their whole attitude. That rather than out there and worrying about their investors, they are worried about the American farmer.
Well, let's go.
Yeah, that's all you needed to know. And if you believe that, you know, so this rally here is a little hard to figure. They are the big players. UFC or ADM, Cargill, we used to be the biggest player in the market, the commercials. We are no longer there. We try to offset the funds who own more stuff than we do. Yes, sir.
Is that Chicago Board of Trade?
This is Chicago. This is straight Chicago. This is not cash price. Everything I do is Chicago. Because basis is different for everybody. So I deal in just Chicago. So that's for the guy that wants to hold stuff a little longer. This is for if you say, hey, if I could get a good basis bid from UFC, ethanol, whoever, from the chickens, whoever it is, but if I don't want to hold it out to July and I could get a good basis bid, here's what I'd be looking for under the mark. There is a gap that exists in the daily chart at 423 to 426. It's been there since last July. And I was thinking, that's your target right there. That's the low that was made. Now, I thought we'd maybe do that last week when we were running hard up. It went all the way to 417. That gap was just that far away, but there wasn't enough buyers in the market. I think what happened is what everybody knows is not worth knowing. What everybody knows ain't worth knowing in the marketplace, and that gap was big. There were a lot of people just waiting, and I was one of them saying, let's sell that gap. But whenever you sell something, somebody's got to be standing there to what? To buy it. I don't think there was enough buyers that would let the market go up there yet. They just weren't willing to do it. It's going to take something, maybe the USDA report, something that gets the market really revved up to go up and get that filled. But that's your first target. The next target under March, I would say, is 458 to 466. And then again, way up here to 417. Now, something I hope you see on this chart, it's not a random walk. Why is that 417 there?
That's a 517.
517, excuse me. 517. But look, that was your low there. The market took it out. Where did it rally back to after bouncing off? There. This is where I come from. These charts are not random. They're able, you can do some things. These are the same charts that the funds or the analysts the around here that are looking at. These are what we use. The thing is I don't know that they're coming. Yes, sir.
Do the charts show historically how long corn will move opposite of crude in the past? How long that'll keep doing that?
Joe?
Corn goes
The
up
longest that
and
I
crude
could
goes
see
down?
when I examined charts for that was 6-7 months, I think was about the longest.
question was, is how, if you could go by a chart and look at how long has it gone where corn has traded counter-seasonal to or counter action to crude oil. And Joe's answer was?
6 or 7 months would be a long time. And we're only 3 months into it, a little over 3 months.
You know, that's, I think the crude is important. The one that I find that's really important, and Joe alluded to it, is the dollar versus farm income. The dollar versus farm income. But back here is your new crop. Any thoughts on old crop? I didn't put up a May. You can extrapolate between the two, but they're targets. You can go out there and you can call up your buyer and say, I want to put in an HTA for this because I do it that way because who knows what the basis will be. Now, if you get a good basis, if you sell your, you know, you can own all the corn you want. I know a guy in Chicago. So I mean, anytime you're selling stuff because you get a good basis, if there are more strategies or that sort of thing, and we'll get to that a little later on because now I'm going to jump to new crop corn. There's a gap. When December new crop, December 15 took over for December 14, when that went off the board, it came on at like a 40-cent premium. Right here. And it created a gap in that chart. That's there. That gap is at 396. And I went back and I looked at that. In the years when that had happened before, without exception, at some point in time, D's corn will trade back at $4. Now that's a pretty bold statement. It should. It doesn't have to happen. It's just always happened before, which doesn't mean. But what that says to me is the people sitting in this room that's seeing that, if you can know that at some point in time, corn's going to trade back to $4 or lower, and we're trading, last week we got all the way to $4.40, it says what? Get something done while corn is above $4. I do not know how high, because I'd be looking at this saying 461 on a weekly chart or 8509. Those would be my targets. What I don't want to see happen is for this to happen and go back down to 377 or come down and take that out. That almost looks like the nicest little inverted head and shoulders you ever saw, but what could happen? The real support in this chart was going all the way back to like 2009, way down here at 293 to 306, and I thought that was a possibility as soon as we took that out, but we didn't. We got to the average seasonal low, which is the last week of October, and away we went. And that rally has actually been more than I thought it would be. But, and we're not even to what? Too hot, too cold, too wet, too dry. Is there any reason to think that won't happen this year? Somewhere it's going to happen. I mean, when you guys, the only thing is you put this in is because at those point in time, what's it going to feel like? It's going up, and it's going to go up forever, right? We know that it don't go up forever. So if you've got your targets in, if you know what you're after, that's what I'm after here. This is the monthly continuation chart of D's corn, which I find really, really interesting. You look at this and you say, back in 2004, that was the highest close we made. Then in 2008, touched it. Look at this volatility. This is where we went to this year. Right to here. I look at this and say, there's still room for precedent down here if the market wanted to do it. And I heard, you know, he said, if prices go below cost of production, right? You know, and you're what I'd call a more experienced farmer. You're out here with me, you know. Does the market really care if it's below cost of production? No. Not one little bit. It doesn't care what it costs to produce it. It says, what do I have to pay to get some? That's all it wants to know. So right here, if I look at this, I said, look at this. It broke this. It's above 415. The next two targets were right here at 440, 460. What was the high last week? 440. 440 was the high. Now I want to say it's not too wet to put that we still have a chance in the market to do this. I don't know that for sure. Old crop corn. The one that's probably interesting when you look at this, guys, and the more experienced farmer, we never dealt with volatility like this. Holy moly, look at those price swings of corn. I mean, that is unprecedented for the last 6 years. And how many of you think that's going to change? Fasten your seatbelts. Write it down. Write it down. The biggest lie I tell myself is I don't need to write it down because I'll remember. My wife swears this is true about me. Write it down. I'll remember. Soybeans. Here's your same chart of soybeans. First week of March, last week of March, first week of April, first half June, and there is a tendency for beans to make a higher later in the year. The only thing is holding something that's worth 2.5 times the price of corn needs a carry 2.5 times the price of corn to make it worth your while. And right now the carry in corn is better than the carry in soybeans. Now that's a whole nother seminar, deciding what am I going to keep in that monument. As you can see right now, soybeans are trading in the nicest little sideways channel you ever saw. This was the seasonal average, the 10-year seasonal average. It made its low, and it tends to go up. The key word is average. So, questions? Input? Here's your front end weekly. Continuation on themes, okay? Going all the way back, again, we bottomed $10. $10 is the support, $10.60, $11.06, $11.60 on your front month. And right now, March is your front month. When March goes off, just use these same numbers against the May chart. And then July, okay? But this is, and the reason I put this up here is because it's less profitable to hold soybeans. It's less profitable to hold soybeans only because of the cost of carry. Now somebody's going to say, well, if I'd had soybeans in my bin last August, I could have got $3 over the market, right? Right after they came off of $12 and were trading down at 10. So, you know, basis, cost of carry, but those are the targets I would use on the front month. Okay, here's July. Just in case you're saying, I'm on my corn bean Florida rotation, and I'm not opening that bin to July, use these numbers. You'd like to see 1082, then up to 1120, 1130, 1180, 1194, and 1225 to 1240. They're targets. They're targets. I want them. That's what I want. And they were only going to get them when? Too hot, too wet, too cold, too dry. I can't say that enough. Here's your March, using the same thing. And what I don't want to see happen is, these were the support levels back here in 2008-9. I don't want to see that. I thought that's where we were headed. We still have a goal here, or the market maybe has this in mind for us. I don't know. But if we can get up here to 475, 1115, 1190, 1185. That's old crop soybeans. New crop, right here, what I'd be using. That goes all the way up to 1062, 11 cents. Now, when I give you these are HTA targets. These are not cash. These are HTA. Then I'd go up here, because this is probably closer, $11. That one I didn't put in, and I've looked at it afterwards and thought about it. That should be in there at $11 before I go to 1210 to 1240. What's interesting here is you don't want to see it go down here. This is big support. Remember that corn chart? These old highs back here in 2004 and coming across here, $8.27. Joe, is that possible?
What's that, Pete?
$8 beans. $8 beans.
Yeah.
I mean, that's, I don't want to see this one up here at 11:14 first, but at least it's those targets to go along with that time frame. Questions on new crop beef? Comments? Now Gary Wills was at our first meeting of this series yesterday, and Gary's worked with seeds as long as, and he's good at it. We asked him right there, Gary, with what's getting sold, are the farmers out there buying more soybeans than they have before and not buying as much corn? And he said, absolutely. So is it happening? Could that 4 million acres of beans that Joe's talking about that could be switched from corn over to soybeans, could that happen? It looks like it's happening. Maybe you guys are part of it. Generally, the Minnesota farmer is not that big wholesale chain. Yes, sir?
This gap you talk about filling them up, how long do they go before they have to be filled up if ever?
The end of time. You know, at some point, it's a self-fulfilling prophecy. On those December, when I went back and looked, it was within a year. That gap on that weekly chart, they go back in and fill. But otherwise, if you look back, when the 2000, you know, we got this to look forward to someday. That's a gap. That's a gap back here in 2012 when the 13 came on. It left that, I believe the top of that's at $7. So someday, corn will go back to $7. Now there's a prophecy for you. Why not? But it's someday. Good question. Other questions? So that's why that plate of cookies is there, because I always say when basis is like a plate of cookies, be watching for good basis. When it comes, take a cookie, because the next time the plate comes around, it might be empty. Here's a good piece of information right here. And Butch in the agronomy department helped me put this together. It just takes the average fixed cost for corn and soybeans. He said if he was building corn at 175 bushels and beans at 48 bushels, if you just extrapolated this out, if you're paying $200 rent, 175 bushel corn, it takes $3.65 cash to break even. $2.50, $3, $3.50 rent. Now we did the early morning meeting up at Bird Island, and I know there's some rents up there, and it's heard, $400 is not off the table. Now I'm going to guess somewhere in here we're dealing with mostly this. Somewhere in here, but look at these prices. Now I know why are guys going to soybeans? Because I can get this. I can't get this here, not yet. But it at least gives you something to go with your marketing plan now to say, what's my line in the sand that I know I don't want to go under? I don't want to be in that case where the market takes it down to less than it costs me to produce it, and the market doesn't care. And you more experienced farmers have been there more than once. And we're not down by the loan risk anymore. The LDP, we better hope we never get there. Futures and options. Here's the commercial. Each one of you are different. There is no one plan fits all in the way of options or anything. What Joe alluded to, especially in new crop, I'm getting old, I'll stand my foot. You guys do not use put options enough. You do not use put options enough. You're enamored a lot of times with calls, because that's it gains if it goes up. But getting those put options, those things that say, hey, it's a do-over, and you've got an artificial floor in the market. Now I know in 60 days we'll get done locking in a great big artificial put. What's that going to be? Your crop insurance. Your crop insurance. When you're locking in that spring price in February, that's like buying a put. The government is financing a put for you, and it's tying it to income. New crop puts work. And they're for that time when the market, when you know in your heart of hearts and you say, I should be doing something, I know I should, but I don't want to. That is the time to do a put. And I know in everybody's marketing life, they get to that point. That's when you buy that artificial floor to say, I did something, I know I did, and I sure hope I'm wrong, because all a put is a do-over. All it is a do-over. Now, I like to say that is the strategies for new crop. And there's more ways to, strategies out there than skinning a cat. Call option strategies for ownership in the old crop. I like to say that because if you go and buy puts under corn that's in the bin, when you buy a put option, it's like spending money. Just add it right to the basis. Just add it right to the basis and say, why am I getting this really good basis if I'm just going to add 10, 15 cents as a put premium or whatever? It just doesn't make sense. If you're worried about that going down on the old crop, go out looking for a basis and sell it. And spend that money on a call option and have a floor in the market of what you sold it for and have the upside potential with using a call. Now there's more strategies, like I said, I'm not going to go into any more detail than that because that's what I'm here for. UFC pays me to be here to go through those things with you guys and help you navigate your way around them. So I'd like to leave you with these thoughts because right now with your marketing plan, you need to know, what do you want? What price do you want? Come up with it. Get that order in place. Get it out there, because if you don't know what you want and you don't write it down, you don't put it in the order, it's just a wish. It's just a hope. What price do you need? We haven't maybe dealt with that one as much as we should, or maybe we will over the next few years in agriculture. What price do I need? And when do I need it? That's the other big one here. Then when do I need it? Learn to use all those tools. Learn to use all those tools. Because in the month of February and March, we are going to do a marketing meeting once a week, every Wednesday, at some location in the UFC system. And I will let you know where that one is going to be, and if they're going to be in the whole system. When that, come to the show closest to you. It's going to happen. And on that sheet, if you want to know when that's happening, fill that out with your email address so I can let you know when we'll be in your area. Now, whatever I've said tonight, if I've mentioned puts, and you go, well, I heard about them, but I don't know what it is, don't you go out and don't you talk to her, don't you go and get any one of those things that you don't know a lot about until you've researched it. Don't do any of the tools in marketing until you know what you are getting into. That's what we're here for. That's what I'm here for. Not just to do it, but you gotta know what you're getting into. So no one knows how high or how low this market is going. Nobody does. And if they did, they wouldn't tell us. Always remember that. The trick is to make money and keep on farming. And that's going to maybe be a bigger trick over the next few years. Who knows? I don't know. Right now, all those things have come up to reflect those higher prices, those rents. Holy moly. And those landlords don't want to come down very much, do they? Don't market this year like you wish you would have marketed last year. That's always a thing we fall back to. I'm going to do this year if I could just, boy. Every year is unique. We don't know what's going to happen. We don't know that those targets, if it's making those highs, make the sale. If the market is making a new low, you don't have to use those dates. It's if the right circumstances are there, use them. And we've just given you our opinion, Joe, my opinion, and they're like, I used to use a different body part, but Jeff told me I couldn't do that. So, but they're our opinion. Everything, you can go on the DTN and get an opinion every day. We're here to help. You know where I'm at. I'll give you a nice car to drive and a cell phone to use. I'm here for you guys. Questions?